Hi guys, so here Anwari here, co-founder of Sublime Trading, here with your daily update for the UK and US indices for Wednesday the 6th of May. Alright guys, hope you're well, hope you had a lovely Tuesday. Interesting day yesterday in the financial markets. UK indices and US indices, we saw bullish moves. In the US market we actually saw a gap up, and that's because of the 20 simple moving average, as mentioned earlier in the week, continuing to act as an area of support. So what we did see was stocks pushing to new highs. So if you look at, for example, AstraZeneca, ticker symbol AZ in the UK market, that's pushing to new highs, and then ticker symbol CHGG, Chegg, in the US market, creating new highs. So a very interesting day yesterday. So what this means is that the market is finding support. It is looking to continue up to new highs, and that's the direction of the market as we speak, and that's the direction we want to be going in. Now, what I do see a lot of on social media is a lot of memes suggesting that you must remain bearish, and now is the time to be bearish because the market is going to reverse. You know, when you start having this mentality of creating memes around the financial market, it's quite immature. It almost becomes a battle where you're looking to take on the market. Guys, you've got to remember that there's trillions flowing through the financial markets on a daily basis. And if you're trying to take on a market of such size with a few £1,000s, you will lose. So what you've got to be asking yourself is, how can I align myself with the market? How can I align with myself with the institutional money so that I can make profit as safely and as easily as possible? And that's by always going in the direction of the trend. So you certainly don't want to be having a bearish bias. Now, you don't want to have a full-on bullish bias because the indices aren't fully bullish, and you want to be waiting until the indices are fully bullish. But for now, the market is indeed looking bullish, and that's the direction we want to be going in. So let's move into the charts and catch up with price action from yesterday.
Okay guys, so if you're new to these daily updates, then I recommend starting with the recording that's pinned to the top of our Facebook page, so you get a good understanding in what I go through in these daily updates. Okay, so as always, this is our 3-screen setup. We have the monthly in the top left, weekly in the top right, and our daily chart down here across the bottom. Starting with the FTSE 100, and on the monthly time frame, if we look at the candlestick for May, we can see that there is a wick now at the bottom of that candle. So what we're seeing is the bulls coming in and starting to push price back up. If we move across to the weekly time frame, we can see that price is still below the 200 moving average and the 50 simple moving average. It's this pullback now that we are focusing on, whether this is a bull revival back to these moving averages or whether this is just a pullback before a continuation to the downside. We need to see price dictate that so that we can get a clear direction in the market. Currently, we can see this bullishness coming in this week, but we want to see a break in the close above the high of last week to suggest strength to the upside. If you come down to the daily time frame, it's the blue line here, which is the 20 simple moving average, which is where I mentioned price is finding support. So we can see yesterday was a bullish day, and we can see bullishness continuing through today, trading above the 50 simple moving average now, but still below the 200 simple moving average. We want to see a break and close above this high, which is the high of April, to suggest strength to the upside. If we move into the US market, starting with the Dow Jones, so bullish April, we can see May bearish so far, but again we can see a bit of a wick coming to the appearing at the bottom of the candlestick for May. If we move across to the weekly time frame, we can see bullish looking weak so far, but we still want to see strength through the high of last week to suggest strength back to the 50 simple moving average, currently trading around the 200 simple moving average. And if we come down to the daily time frame, we can see the 20 simple moving average, which again, this blue line acting as an area of support. What we want to see now is momentum potentially through the high of April and back to the 200 simple moving average. You can see price is still below the 200 moving average on the daily time frame. We want to see price break through that and then strength through to the all-time high. Similar setup on the S&P 500. We can see that a very bullish month for April, a slow month so far in May. Again, we can see a bit of a wick appearing at the bottom of that candlestick, so the bull's starting to come in and push price back up. Remember though, still very early in the month. We really want to see how price action plays out throughout the rest of May, but so far we can see a bit of bullishness coming in. On the weekly, price is very much above the 200 moving average, but below the 50 simple moving average and that 3,000 round number. Bullish week so far, but again, key resistance levels ahead that we want to see cleared. Same on the daily time frame. We can see that price is finding support at the 20 simple moving average, gap up, but we want to see price break through the high of April and the daily 200 moving average and that 3,000 round number. So multiple resistance levels ahead. If this area is cleared, then we could potentially start seeing strength to the all-time high. Moving across to the Nasdaq. Now the Nasdaq is very much leading the way. We can see prices trading above the high of 2019, which is this green line. This is a positive sign because this could then mean potential strength back to the all-time high. So this is really what we want to be seeing across all the indices, this kind of bullishness. But on the Dow Jones and the S&P, price is still inside the annual levels of last year. The Nasdaq is trading above the high of last year, which is a strong sign of a bullish bias. If we move across to the weekly time frame, price is above the 200 and the 50 simple moving averages. We can see a bullish week so far this week. Still want to see price convincingly breaking close above the 9,000 round number, which will then suggest strength to the all-time high. On the daily time frame, it's the 20 simple moving average, which you can see acting as support. We had a move up on Monday and then this gap up on Tuesday's bar. We want to see a break in the close above the high of April and for price to break through that 9,000 round number to suggest strength to the all-time high. So the Nasdaq very much leading the way compared to the Dow Jones and the S&P 500. Let's move to the S&P 500 mini, see how today has started in terms of pre-market action. Starting with the monthly, again we can see a wick to the bottom of May's candlestick. This is a positive sign of potential strength to the back to the high of 2019. We do have that 3,000 round number acting as resistance. You can see that in more detail on the daily. Price above the 200 moving average, but below the 50 simple moving average and that 3,000 round number. Bullishness coming in this week. And if we come down to the daily time frame, we can see how the 20 simple moving average is acting as support. Monday, Tuesday, bullish days. Wednesday now looking bullish as well. So potentially what we could see is further strength through the rest of today. And then we want to see these resistance levels ahead cleared, which is the high of April, the 200 simple moving average and the 3,000 round number. If these resistance levels are cleared, then a positive sign of strength back to the all-time high. Again, remember, it's the end of day candlestick that we want to focus on very early in the day. We want to see how the open plays out and then how momentum comes in. Remember, institutional money comes in through the last hour of the day, so we will get a much better idea of what kind of candlestick we'll have and potentially what we could see through to tomorrow. So for now, still applying patience, still standing aside as we don't have a clear direction. You don't want to be bullish. You don't want to be 100% bearish. You want to be aggressively patient and waiting until the market dictates a clear direction. So that's what we're doing for now. Our stance is standing aside. Okay, that's me for today, guys. Please like, comment and share. Let's get these videos out there. Let's get people understanding how to use the indices correctly to build a solid investment portfolio. And I will see you on tomorrow's recording.